Okay, so
Hello,
we are with Tatiana.
everyone.
What's
Hi.
that?
I said hi.
All right, well, we got Tatiana here for this week's Mortgage Minute. All right, catch us up. What's going on with the interest rates?
Hey, guys. Yeah, so let me actually start with the chart for the interest rates. So we can talk a little bit about that. Let me share my screen. Hold on.
Yeah, and while you're sharing, I saw, what was it? I think when I was at the gym today, I saw on one of the faraway TVs, they said that the feds may be considering possibly lowering the rates at the end of the year. So have you heard anything about that?
Yeah, so there are talks about that. You know, some professional financial institutions thinking that it could happen. Just because inflation is going down and basically the increasing the prime rate by Fed created this inflation to go down. That's in their opinion. So it is possible that they might lower the rate, or maybe they'll just keep it the same.
Okay.
But can you see my screen?
Yes.
Yes.
It's nice and big, you can see. Yeah. So Freddie Mac's chief economist, Sam Hatter, said that for the fifth week, consecutive week, mortgage rates rose as ongoing market and geopolitical uncertainties continues to increase. So you can see that interest rate went from 7.49% from last week to 7.57. That's according the sources, the Freddie Mac's primary mortgage market survey. So, however, it looks like inflation, just like it said, is moving in the right direction. And the latest consumer price index report shows a promising trend with core inflation currently at 4.1%. And that's a significant dip from last year, 6.3%.
Okay.
So the prognosis, Fannie Mae and mortgage bankers associates predict that mortgage rates will fall next year.
Okay.
But they disagree about the fourth quarter in 2023. So if you can see on this chart, Fannie is thinking that rate is going to still stay at around 7%, when MBA thinking it's going to be 0.6, 0.3. But, first quarter and second quarter of 2024, they're predicting rates to go down. MBA is more optimistic about the rates. We'll see what happens. It's interesting it's unprecedented times, and it's really hard to predict what's going to happen.
It's crazy because it seems like, week by week, the prognosis and the forecast changes. So last week, it's like they're going to hold, they're going to go up, it's going to go into the end of Q4 2024. And then, 3 weeks before that, it was like, we're going to be going down in Q. So it's really the truth is nobody really knows.
It's all over. And whatever it was that I was looking at this morning, they even used the R word. They're like, because they might be worried about a recession. And I'm like, wait a minute. We've been in a recession. We're worried about inflation, like what's going on, right?
Yeah.
Okay. Exactly. Okay. So you've got Fannie Mae here.
And NBA, and then you were talking about Freddie Mac, and we get this question
all
the time with people who are just going into the home buying process. So they're Googling everything about rates, and they're like, I just don't understand with Fannie and Freddie and whoever else. And so who even are Fannie Mae and Freddie Mac? Can you give us the lowdown on that?
I can. So let's see. So Fannie Mae and Freddie Mac are two government-sponsored enterprises in the United States. They were created to help make home ownership more affordable and acceptable for people. So Fannie Mae stands for Federal National Mortgage Association.
Okay.
And Freddie Mac stands for Federal Home Loan Mortgage Corporation.
Okay.
So they both very similar and in the way they work, and so let's just see. Let's say the person is looking to buy a home,
Okay,
to obtain a mortgage from a bank or other lender.
okay,
Let's say they get 30-year fixed mortgage, which helps borrower to lock in a fixed, relatively low payment, and is one of the most popular options in the US, right? So they get in a mortgage from the bank, and then Fannie Mae or Freddie Mac buy mortgages from the lender, which frees up funds for the banks to originate new mortgages.
okay,
The loans that Fannie and Freddie then will purchase must meet a certain characteristics, and cannot exceed certain sizes. So that's why all the lenders have to follow their guidelines. So at the end, after they close the deal and they sell loans to Fannie and Freddie, the Fannie and Freddie would actually buy those loans, because they are the ones who are dictating the guidelines and certain characteristics of that loans has to meet for them to buy that loan.
okay,
So then Fannie and Freddie can keep those mortgages on their books and collect interest on loans. But most often they will just package a number of mortgages into mortgage-backed securities that can be sold back to banks or other investors. So Fannie Mae and Freddie Mac would guarantee payments on those securities, even if home buyers will default.
okay,
So they're like the middleman in like an insurance policy.
Exactly. So, and then the guarantees from Fannie and Freddie have made those securities popular with investors, who would see the safety, they would see them as a safe investments, pretty much.
okay.
So that's
and they both Fannie Mae and Freddie Mac do the same thing.
So the Freddie Mac and exactly. So they very similar. They have some differences in guidelines. So some lenders, they know those differences, and sometimes I originate the loan, I send it through the Fannie or I send it through the Freddie Mac, but in most cases they go hand in hand. They're very similar, with similar guidelines. So they basically, in summary, these organizations are to help to make it easier for people to get home mortgage, and then buy from the loans by buying mortgages from lenders and providing more funds to the housing market, right? So the difference between Fannie and Freddie, besides the guidelines, like some very small differences in guidelines, in general, Fannie tends to buy loans from larger commercial banks and lenders, and Freddie Mac usually buys loans from smaller banks or credit unions. But this is the primary difference between those two, and it doesn't really affect an actual buyer in any way.
Interesting. Okay, very good. That's very clear.
That's very clear. So I think this is a really great illustration to show people that, the lender that they choose offers up these different programs, right, Tatiana? So if I'm a buyer and I'm coming to you and I give you the scenario, I want to buy this house and this is my credit and this is my income, and you give me my options, you're giving options based on, do I fit into Fannie Mae or Freddie Mac criteria, and maybe any other
investors
that you work with. That's where you're giving me my options from, is you're pulling from that pool.
Exactly. And it's important to know that about the guidelines and banks overlays. So what's banks overlay? Basically, every bank, like I said, they have to follow Fannie and Freddie's rules and guidelines, but they could impose overlays, meaning they put more strict guidelines, just let's say Fannie, Freddie say the minimum credit score is 620
Okay.
for us to buy the loan. And the bank is gonna say, we're gonna make it 640. We're gonna make it more stringent. And that's important to know that, credit unions and some big banks, they do put those overlays. So it could potentially make it a little bit harder for buyer to get conventional loan versus direct lenders like Prosperity Home Mortgage that we work directly with Fannie and Freddie. We know their guidelines, we follow their guidelines. And in some cases, I know I might not be able to get this person approved under Fannie, but I can get them approved under Freddie Mac. And the rates are identical, they're exactly the same. But in some cases, I can get the loan done through one or another. So that flexibility and knowledge is very important because it just helps a person to get a mortgage. Basically.
I think that's a really good point, is that not all lenders are direct lenders from those GSEs, right?
Exactly.
Not all of them are.
Okay, explain GSE.
That's the government, GSE, government something entity, government sponsored entity.
Yes.
Right? Or enterprise. Yeah. And that's what Freddie Mac and Fannie Mae are. They're government sponsored. Okay. So here's another question of confusion we get. How is Fannie Mae different than FHA? A lot of people get those confused. So where does FHA fall into this whole situation?
So the FHA is Federal Housing Administration program and follows the HUD guidelines. So it's a
completely
different
totally
story.
Okay, it's not a government sponsored entity then. It's not like a cousin of Fannie Mae and Freddie Mac, right? It's a totally different thing.
Well, I mean, you could call it a cousin, I guess, because at the end you get a mortgage from them as well. And, in some cases, FHA is better option than conventional. And maybe it's actually going to be a good idea to talk about that. What are the differences in which cases it's better to go with one or another. But I guess it's different.
I like that. I think that one time we need to talk about conventional, jumbo, FHA, even, what is it, the USDA, VA, like explain why all these, why.
Exactly.
We should do one of
Put it on the list.
Okay, I'm going to add it to the list.
Tatiana's going to make it PowerPoints the rest of her life. All right.
I can make this PowerPoint in 5 minutes now, it's just like.
There you go. We're making you're just like that. Yes.
We need AI for that. Hey AI, Chat GPT, I need you to create a PowerPoint on this. And it's just going to do it.
That's right.
That's a good idea. Thank you.
All right. Well, do you have anything else, or are you good?
I don't have anything else.
Okay. Well, thank you as always. And we will be back in touch with you next week and dive into our next Mortgage Minute.
Yeah. I hope everything's okay with your family.
Yeah, we'll be praying for you.
Thank you so much, guys.
All right. See you next week.
Bye.
Bye.